Earlier this month, two giant banks, SUNTRUST and BB&T, announced that they intended to merge. This new too-big-to-fail institution would have about $450 billion in assets and become the sixth largest bank in the United States. Now, as you know, bank acquisitions and mergers don't go through on their own. They have to be approved first by the Fed. So last spring, I wrote you a letter asking for data on the number of merger and acquisition applications received by the Fed and the number that had been approved over the last 10 years. Chairman Powell, when you answered my letter in May of 2018, how many mergers and acquisition applications for the banks had you received since 2006? Do you remember?
No, I don't have the number.
Would 3,819 sound right?
Yes. Exactly.
Good. Okay. And do you remember how many of those 3,819 applications you denied?
No, I don't.
Would 0 sound right?
If you say so.
Well, you said so. It's your letter. Chairman Powell, has the board denied any applications since you responded to my letter in May?
I would just, if I can offer a little context.
Let's get this part out, because that's what I'm trying to do, is build some context.
I don't believe we have. I think what happens is that people don't apply or they withdraw their application.
That's exactly what I'm going to talk about. So 0% of the applications for mergers and acquisitions since 2006 have been denied. Now, that doesn't mean that all potential mergers and acquisitions make it through the process. 13% of applications are withdrawn before they get a decision. According to your letter, Chairman Powell, quote, prospective applicants may discuss a proposed transaction with Federal Reserve System staff prior to filing, and applicants will be discouraged from filing applications where it is apparent that the applications would not meet all of the statutory factors required for approval, end quote. So you think that if you think that a proposed merger won't be approved, you discourage the bank from following through. Is that right?
In some cases. I think that would be in cases where it's clear that there's a statutory problem. You know, for example,
okay.
In some cases.
But you approve 100% of those that go ahead and apply. So I assume they're getting
unless they're withdrawn.
That's what I said. So you encourage them to withdraw if they're not going to get an approval.
But they can file and then withdraw.
Well, but the point is they withdraw if they're not going to get it because of a conversation you have that's a non-public conversation. So this is a formal process required by regulation. In order to do an approval, people who object to the merger have an opportunity to file a protest. That's how the process is supposed to work. That would include, for example, communities that are worried that local banks may close following a merger or acquisition, employees who are concerned about losing their jobs, state officials that may be concerned about decreasing competition, and so on. So, Chairman Powell, you've explained that consultation with a bank can start before the merger is announced publicly. When is it that the public can actually file protests, before or after the merger is announced?
So I think the process is that we receive an application for a merger, which we have not received yet. I think we expect to receive it, I'm told, sometime next month. And
when will the public have a chance?
Certainly then.
And that's true in all of these, right? The public doesn't get a chance to comment until after the application is already filed. But the application is only filed after the banks have had a chance to have this quiet conversation with the Fed. So look, I just want to get this straight. You and the banks get together in the back room and grease the wheels before the merger is announced. And if you're not going to approve the merger, you tell the bank in advance and then they go figure out something else. If the public wants a chance to weigh in, they have to wait until you've already made a decision. You know, no wonder you approved 100% of the merger applications. Not a single no. Your approval process itself appears to be a rubber stamp, that everything is happening behind closed doors. So the question I have is about the SUNTRUST and BB&T merger. Is this one just going to be another rubber stamp? You've already made the decision behind closed doors before the public gets a chance to weigh in?
No, not at all. No, we're going to conduct a very fair and open, transparent process. I think our obligations under the statute are clear and they're quite broad. We'll be hearing from groups of all kinds and going through our process carefully and thoroughly.
So it's just that in the last 3,819 merger applications, which were all approved without a single one for which you said no, this time you're going to be listening to comments from the public that might cause you to say no. You know, I just have to say, I'll bet that SUNTRUST and BB&T looked at that 100% merger success rate and saw what everyone else sees. And that is that the Fed works for big, rich banks that want to get bigger and want to get richer. And then everyone else pays the price for diminished competition, for worse service, for higher prices, for employee layoffs, for the risk that we have yet another too big to fail bank on our hands. And I just think it's time that we put down the rubber stamp and that we really let the public and everyone else weigh in before we create yet another too big to fail bank.